Impact Report, anticipated 30% increase in cross-border investment in technology, agriculture and defense sectors by mid-2025 amid U.S. China tensions. Date, January 28, 2025. Executive Summary. This report analyzes the projected 30% increase in cross-border investment within the technology, agriculture and defense sectors by mid-2025, primarily driven by the intensifying geopolitical tensions between the United States and China. The evolving dynamics in these critical industries reflect a strategic shift in global investment patterns as nations and corporations seek to navigate the complexities of international relations and economic competition. 1. Investment growth projections. Analyses indicate that cross-border investments in technology, agriculture and defense are set to rise significantly. This surge is largely attributed to demand for technological advancements. As nations prioritize technological innovation, investments are expected to flow into sectors that promise enhanced productivity and competitive advantages. Food security concerns. Recent disruptions in supply chains exacerbated by geopolitical tensions have heightened the focus on agricultural investments, particularly in food production and sustainability initiatives. Defense modernization. Countries are increasingly investing in defense capabilities to counter perceived threats, leading to a rise in partnerships and joint ventures in the defense sector. 2. Competitive pressures in the technology sector. The technology sector is witnessing unprecedented pressures, particularly from rising Chinese competition. AI innovations. Companies like DeepSeek, a Chinese AI startup, are challenging established U.S. tech giants such as NVIDIA by offering cost-effective AI solutions. DeepSeek's rapid ascent in the market has raised alarms over U.S. firms' competitiveness. Investment strategies. In response, U.S. companies are likely to accelerate innovation cycles and re-evaluate pricing models to maintain market share in the face of fierce competition. 3. Agriculture and defense sector dynamics. Investment trends in agriculture and defense are being reshaped by current global challenges. Agricultural investments. Nations are focusing on self-sufficiency and food security, prompting increased investments in sustainable agricultural practices and technologies. Defense spending. With rising geopolitical threats, defense expenditures are projected to increase, especially for countries allied with the U.S. This shift is expected to lead to expanded defense collaborations and technology transfers. 4. Market reactions and economic indicators. Financial markets are reacting to these developments. Volatility in U.S. stocks. Recent trends show fluctuations in U.S. stock markets, particularly within the technology sector, driven by mixed economic indicators and investor sentiment. Impact of economic data. Key economic indicators, including the Services Purchasing Managers Index (PMI), reflect a cautious outlook, suggesting that while growth is possible, uncertainties remain. 5. Central bank influence. The monetary policies of central banks are crucial in shaping investment landscapes. Dovish stances expected. Anticipated dovish policies from the Federal Reserve, European Central Bank and Bank of Canada could lead to lower interest rates, making investments in technology, agriculture and defense more appealing. 6. Timeline of events. January 2025, U.S. tech stocks face significant sell-offs due to growing competition from Chinese firms. Mid-2025, a projected 30% increase in cross-border investments across key sectors is expected as businesses adapt to ongoing geopolitical tensions. Differences between sources. While various analyses emphasize the impact of U.S. China tensions on investment strategies, the focus varies. Some sources highlight technological competition, particularly in AI. Others underscore broader implications for agriculture and defense. Projections for investment growth differ, with some analysts optimistic about post-pandemic recovery while others express caution amid geopolitical uncertainties. Conclusion. The anticipated increase in cross-border investments by mid-2025 underscores the complexities of navigating global markets amidst U.S. China tensions. The interplay of competitive pressures, economic indicators, and strategic adaptations in the technology, agriculture, and defense sectors will significantly influence the future landscape of international investments. Companies and investors must remain agile to effectively respond to these evolving dynamics. This report serves as a crucial overview of the expected transformations in cross-border investment strategies, offering insights into potential opportunities and challenges within a rapidly changing geopolitical environment. The anticipated 30% increase in cross-border investment in technology, agriculture, and defense sectors by mid-2025 is closely tied to the geopolitical tensions between the U.S. and China. The implications of this investment surge are multifaceted and present several counterintuitive aspects that may not align with conventional expectations regarding global investment flows and market dynamics. 1. Investment growth amidst tensions. Traditionally, one might expect that geopolitical tensions would lead to a decrease in investment due to uncertainty. However, the opposite seems to be true in this scenario. Investors are responding to the risks associated with U.S.-China relations by diversifying their portfolios and seeking opportunities in sectors that are critical for national security and economic stability. This trend contradicts the notion that instability universally deters investment. Instead, it highlights how certain sectors may thrive under pressure. 2. Tech sector dynamics. The competitive landscape in the technology sector is also shifting in unexpected ways. While U.S. companies have long been seen as leaders in innovation, the emergence of cost-effective solutions from Chinese firms such as the AI startup DeepSeek is altering this perception. DeepSeek's ability to produce competitive AI technology at a lower cost challenges the belief that high investment is necessary for technological advancement. This could lead to U.S. firms re-evaluating their business models and pricing strategies, suggesting that innovation may not always correlate with high spending. 3. Agriculture and food security. The anticipated increase in investment in agriculture is largely driven by the need for food security, especially following recent global supply chain disruptions. This is counterintuitive because one might assume that agricultural investment would dwindle in times of economic uncertainty. However, nations are prioritizing their food supply chains, which could lead to a robust demand for agricultural technology and practices. The push for food security amidst geopolitical tensions underscores a shift in investment priorities that may not have been widely anticipated. 4. Defense spending as a growth catalyst. Similarly, the rise in defense spending, often seen as a reactionary measure rather than a proactive investment strategy, is expected to spur significant growth in the defense sector. This increase reflects a counterintuitive shift where countries are investing in defense capabilities not just as a response to threats but as a strategic move to enhance their technological edge and economic resilience. This suggests that defense investments can be seen as a proactive strategy to foster innovation rather than merely a reaction to geopolitical tensions. 5. Market volatility and economic indicators. The financial markets have shown volatility in response to mixed economic data, which is typically interpreted as a sign of caution among investors. However, this volatility could also be viewed as an opportunity for savvy investors to capitalize on market fluctuations stemming from geopolitical tensions. The expectation of dovish central bank policies, particularly from the Federal Reserve and other central banks, may further enhance the attractiveness of investments in these key sectors, contrary to the typical perception that such volatility is inherently negative. 6. Central bank influence. The role of central banks often instills a sense of caution among investors as interest rates and monetary policy directly influence investment decisions. Yet the anticipated dovish stances from central banks could paradoxically encourage more aggressive investment strategies in technology, agriculture, and defense. This illustrates how monetary policy can create an environment conducive to growth even in the face of geopolitical tensions. 7. Differing perspectives on investment growth. Different sources highlight varying perspectives on the investment landscape. with some emphasizing the technological competition while others focus on agriculture and defense. This divergence reflects a complex reality where the narrative around U.S. China tensions is not monolithic. The varying timelines and projections for investment growth suggest that while there is a consensus on the anticipated increase, the pathways to achieving this growth are multifaceted and not easily predictable. In conclusion, the anticipated increase in cross-border investments by mid-2025 reveals a complex interplay of factors that challenge conventional assumptions about geopolitical tensions, market dynamics, and investment strategies. The counterintuitive insights highlighted above demonstrate that rather than merely reacting to uncertainty, investors are actively seeking opportunities to leverage the shifting landscape in technology, agriculture, and defense. This evolution underscores the need for agility and adaptability in navigating the complexities of global markets. The report anticipates a significant 30% increase in cross-border investment in technology, agriculture, and defense sectors by mid-2025, driven largely by the geopolitical tensions between the U.S. and China. While many readers may focus on the broader implications of this investment surge, several critical details within the analysis could easily be overlooked. Here are some of those points along with an explanation of their significance. 1. Niche competitors in technology. The rise of DeepSeek, a Chinese AI startup that competes directly with established U.S. tech giants like NVIDIA, is particularly noteworthy. This case exemplifies the potential for emerging players to disrupt established market dynamics. Many analysts might focus on the overall competitive landscape without recognizing that the entry of such nimble, cost-efficient players could catalyze a broader wave of innovation. The significance lies in how this competition could force U.S. companies to adapt quickly, potentially leading to faster technological advancements and more competitive pricing. This aspect also highlights the fragility of market leadership, reminding investors that today's leaders could be tomorrow's laggards if they fail to innovate in response to new competitors. 2. Food security as a driving force. The emphasis on food security in agriculture investments reflects a fundamental shift in priorities among nations. While many reports mention investment growth, the specific reasons behind it, like recent supply chain disruptions, might be overlooked. The significance here is profound. As countries increasingly focus on self-sufficiency, this could lead to a realignment of global agricultural trade patterns and influence international relations. Nations that fail to adapt to this trend may find themselves at a strategic disadvantage, making this a critical area for investors and policymakers alike. 3. Defense spending correlation with geopolitical tensions. Increased defense spending in response to geopolitical threats is a well-acknowledged trend, but the nuances of how this spending is allocated can be overlooked. For instance, the report suggests that nations collaborating with the U.S. could see an uptick in joint ventures and technology transfers. The significance of this lies in the potential for creating a new class of defense technologies and collaborative frameworks that could reshape military capabilities. Understanding these dynamics is crucial for investors looking to capitalize on defense contracts or technological innovations linked to military applications. 4. Central bank policies and interest rates. The anticipated dovish stances from central banks, particularly the Federal Reserve, may be seen merely as standard monetary policy. However, this context is especially significant because lower interest rates can enhance the attractiveness of investments in sectors like technology, agriculture, and defense. The interplay between monetary policy and investment flows is critical. Investors may overlook how changes in interest rates can serve as a catalyst for capital to flow into these sectors, especially if they are perceived as growth-oriented despite broader market volatility. 5. Market volatility and economic indicators. The report notes fluctuations in U.S. stock indices alongside mixed economic data, including the services PMI. While many analysts might focus solely on the stock market's immediate reactions, the underlying economic indicators can provide deeper insights into market sentiment and investor behavior. Understanding these relationships is vital for anticipating future market movements. investors should be aware that economic indicators often reflect underlying trends that can predate or predict market shifts. 6. Diverse perspectives on investment growth. The report illustrates how different sources interpret the implications of U.S. China tensions variably, with some emphasizing technology and others focusing on agriculture or defense. This divergence highlights the importance of considering multiple viewpoints when assessing market conditions. Investors who only focus on a singular narrative may miss out on broader trends that could provide lucrative opportunities across sectors. Recognizing the multifaceted nature of investment dynamics allows for a more nuanced investment strategy that can adapt to changing conditions. In conclusion, while the anticipated increase in cross-border investments presents a clear opportunity, the nuanced factors influencing this growth warrant closer scrutiny. Key elements like emerging competitors in technology, the importance of food security, shifts in defense spending, central bank policies, economic indicators, and diverse interpretations of investment trends provide a comprehensive view of the landscape. Investors and analysts who delve into these often overlooked aspects will be better positioned to navigate the complexities of international markets amid ongoing geopolitical tensions. 1. Investment growth and strategic diversification. The projected 30% increase in cross-border investment in technology, agriculture, and defense sectors by mid-2025 is a critical response to the escalating U.S. China tensions. This growth is fueled by companies aiming to diversify their supply chains and minimize geopolitical risks. The heightened demand for technological advancements and food security, alongside increased defense spending, illustrates a significant shift in investment strategies as nations and corporations seek resilience against market volatility. This diversification is not merely a reactive measure but a proactive strategy to secure competitive advantages in an uncertain global landscape. 2. Competitive dynamics in the technology sector. The competitive landscape in the technology sector has intensified, particularly with the emergence of cost-effective Chinese firms like DeepSeek, which challenge the dominance of established U.S. tech giants. This competition is pushing U.S. companies to accelerate their innovation cycles and reconsider pricing strategies. The implications of this rivalry extend beyond mere financial metrics. They influence global technological standards, collaborative efforts in research and development, and the strategic positioning of companies in the international market. Understanding these dynamics is crucial for investors and policymakers aiming to navigate the complexities of the tech industry amidst geopolitical frictions. 3. Geopolitical influences on agriculture and defense investments. The anticipated rise in investments in agriculture and defense is closely tied to national priorities around food security and military capabilities in response to geopolitical threats. As countries reassess their defense postures and agricultural policies, there is likely to be an uptick in collaborative ventures and technology transfers, particularly among allies. This trend underscores the interdependence of national security and economic stability, highlighting the need for strategic partnerships and investments that bolster both sectors. Analyzing these trends provides insights into how nations are positioning themselves for future challenges and opportunities in a rapidly changing geopolitical environment. 4. Central bank policies and economic indicators. The role of central banks, particularly the Federal Reserve, European Central Bank, and Bank of Canada, is pivotal in shaping investment landscapes. Anticipated dovish policies may lead to lower interest rates, making investments in technology, agriculture, and defense more attractive. However, market volatility and mixed economic indicators such as the Services Purchasing Managers Index (PMI) suggest that investors should adopt a cautious approach. The interplay between monetary policy and investment decisions is crucial for understanding market dynamics and the economic outlook, informing both corporate strategies and investor behavior in a context marked by uncertainty. These points encapsulate the multifaceted nature of the anticipated investment surge, reflecting the intricate interplay of geopolitical tensions, competitive pressures, sector-specific dynamics, and economic policies.
Addressing these areas in depth can yield valuable insights into the future trajectory of cross-border investments and their implications for global markets.
1. The Cold War arms race 1947 to 1991. The U.S.-Soviet Union rivalry during the Cold War exemplifies how geopolitical tensions can drive significant increases in defense investments. As both superpowers sought technological and military superiority, they invested heavily in advanced weaponry, space exploration, and nuclear capabilities. This arms race not only led to substantial advancements in military technology but also resulted in a worldwide arms trade that influenced numerous countries' defense policies and economic strategies. 2. The global financial crisis and subsequent recovery 2007 to 2010. The financial crisis of 2007 to 2008 led to a significant decline in global investments across various sectors, including technology and agriculture. However, the recovery period saw a renewed focus on cross-border investments, driven by countries' needs to stabilize their economies and improve technological infrastructure. As nations sought to rebuild, investments in technology and agribusiness surged, influenced by changing global market dynamics and the need for innovation. 3. U.S. China trade war 2018-present. The ongoing trade tensions between the U.S. and China have significantly impacted cross-border investments in various sectors. Tariffs and trade barriers prompted companies to re-evaluate their supply chains, leading to increased investments in technology and agriculture outside of China. The trade war has led to a race for technological dominance, particularly in sectors like semiconductor manufacturing and artificial intelligence, as both nations strive to secure competitive advantages amid growing geopolitical uncertainties. The anticipated 30% increase in cross-border investment in the technology, agriculture, and defense sectors by mid-2025 is indicative of the dynamic shifts occurring in global markets, largely influenced by ongoing U.S. China tensions. This trend reflects both opportunities and challenges as industries adapt to geopolitical realities and competitive pressures. 1. Investment surge in key sectors. Analysts predict that the demand for technological innovation, food security, and enhanced defense capabilities will drive this significant increase in investment. Companies are expected to diversify their supply chains, seeking stability in response to geopolitical uncertainties. This strategy will particularly benefit sectors that are integral to national security and economic resilience. 2. Competitive landscape in technology. The technology sector is experiencing intense competition, notably from Chinese firms that are rapidly advancing in areas like artificial intelligence. The emergence of companies such as DeepSeek, which offers cost-effective AI solutions, poses a direct threat to established U.S. firms like NVIDIA. As a result, U.S. tech companies may be compelled to accelerate innovation cycles and re-evaluate pricing strategies to remain competitive. This scenario highlights the need for agility and adaptability in the face of evolving market dynamics. 3. Agriculture and food security. Cross-border investments in agriculture are set to increase, driven by a heightened focus on food security. Recent global supply chain disruptions have underscored the importance of stable food sources, prompting nations to invest in agricultural technology and infrastructure. This shift may lead to increased collaboration between countries, aligning investments in sustainable practices and advanced farming technologies. 4. Defense sector expansion. In light of geopolitical threats, defense spending is projected to rise significantly. Countries are likely to enhance their military capabilities through increased investments in defense technologies, including cybersecurity and advanced weapon systems. Collaborative efforts with the U.S. and other allies may result in joint ventures and technology transfers, further bolstering the defense sector's growth. 5. Market reactions and economic indicators. Financial markets are currently exhibiting volatility, influenced by mixed economic data and shifting investor sentiment. The U.S. Services Purchasing Managers Index (PMI) reflects a cautious market outlook, suggesting that while growth potential exists, investors should remain vigilant.
As companies navigate these uncertain waters, market reactions will be closely tied to economic indicators and global events. 6. Role of central banks.
Central banks play a pivotal role in shaping investment decisions.
The expected dovish stances from the Federal Reserve, European Central Bank, and Bank of Canada could lead to lower interest rates, making investments in technology, agriculture, and defense more attractive.
The anticipation of these monetary policy adjustments may influence market dynamics and investor strategies in the coming years. 7. Future predictions and strategic implications. Mid-2025 outlook. By mid-2025, a 30% increase in cross-border investments is anticipated,
driven by strategic shifts prompted by U.S China tensions. Companies across the technology, agriculture, and defense sectors will need to remain agile to capitalize on emerging opportunities. Technological innovation. U.S. tech firms will likely focus on enhancing their competitive edge through innovation.
Companies may invest heavily in research and development to maintain market leadership against rising foreign competitors. Food security initiatives. Nations will increasingly prioritize food security, leading to a surge in agritech investments. This focus could catalyze advancements in sustainable farming practices and technology adoption. Defense collaboration. Defense partnerships will likely intensify, with countries engaging in joint projects that leverage advanced technologies.
This collaboration will enhance military readiness and foster innovation within the defense sector. 8. Conclusion. The anticipated 30% increase in cross-border investment by mid-2025 underscores the complex interplay of geopolitical tensions, market dynamics, and sectoral growth. As the world navigates these challenges, companies and investors must remain adaptable and forward-thinking to harness the opportunities presented by changing global conditions. The future landscape of international investments will be shaped by the capacity to innovate, collaborate, and strategically respond to emerging threats and opportunities.